taxes, retirement, IRMA surcharges, RMDs, Social Security. There are so many things interacting together. When you are planning taxes in retirement, it can be confusing. Well, we're going to try to wrap that all up today on the Retirement Answer Man Show. My name is Roger Whitney. I appreciate you being here. I'm thankful this day before Thanksgiving that you are joining me. This is the show dedicated to helping you not just survive retirement. We really do believe, I believe, you can rock retirement, regardless of what's happened in the past. So today we are wrapping up our first monthly edition of Tax Management in Retirement. Man, a month did not seem long enough. There are so many things to dive into. We will definitely be doing a monthly theme on this again. But today we got to tidy it up because we're ending the month of November. And so before we can do any of that, let's get to that all-important disclaimer. All right, my friend, tax management, retirement. Remember, you need to speak with professionals before you implement some sophisticated strategy and talk to somebody that knows enough about you to actually give you advice. And I am definitely not that person. I only give advice to clients. So I suggest you talk to a CPA or a financial advisor or a legal advisor before you do anything. This is Helpful Hints in Education. With that, we're going to go to the Hot Topic segment and talk about some Christmas gifts if you're stuck, so you can figure out what to give the people you love. And today is the day before Thanksgiving, so we're coming rapidly upon the Christmas season. First of all, before I give you some top Christmas gift ideas for people that may have everything or that are just difficult to buy for, before I do that, since this is the day before Thanksgiving, and we just passed our 300th episode, I want to make sure you know that I am very thankful for you. Now, it's easy to say that. It's easy to talk about platitudes. Oh, Merry Christmas, Happy Thanksgiving. This is not a platitude. Having just hit 300 episodes last week, it's given me a little bit of time to reflect, and Nicole is really good at helping me with this, on the last 4 or 5 years of this show. And I can tell you, this show, interacting with you through this show, in an email, and in the Rock Retirement Club, I'm not saying this lightly, has truly changed the direction, the course of my life, not just professionally, but personally. I feel so blessed, and I am very thankful that I get to noodle on how to rock retirement every week with you. And I'm thankful for your emails, for your words of encouragement, for your criticism shared with love. They're awesome. So we're wrapping up our annual survey so we can prepare for all of 2020. So if you go to rogerwhitney.com/survey, spend 5 minutes, tell us what you like about the show, tell us what you don't like. Tell us a little bit about yourself so we can make this even awesomer for you. Okay, now Christmas shopping. It's a hard one, at least for me, and it may be for you. So I thought I would share my 5, let's see what I got here. I got 6, 7-ish Christmas gifts that aren't normal or as normal as a fruitcake or golf balls or what have you. That might be something that you can give to someone that you don't know what to give them because they sort of have everything. And most of these things can be personal too. Not all of them, but most of them could be. So number one is, if you are within 5 years of retirement, and I know from the survey so far, the majority of you are within 5 years of retirement, this might be a good thing for you to get you or you and your spouse. And that is a huge wall calendar. Now, I already have my 2020 calendar up, and it's probably, I'm looking at it here, it's probably 6 foot long and 3 to 4 feet tall. It's a big calendar. And I filled in, I'm looking at it right now, I see my Italy trip for my 30th anniversary. I see my 5 weeks in Colorado. I see, maybe a few too many conferences. I see my strategic coach where I go work on myself. This calendar I keep in my command center. And this might be something that you and your spouse, or maybe someone you know that's getting ready to retire could use. So I use the NeuYear Calendar. It's at NeuYear.net wall calendar. And it's huge. And it might be a great way for you and your wife, or you and your friends or partner or whatever, to put on your vacations, pre-schedule those free days. And maybe if you're getting ready to retire, your countdown day. So this might be a good gift for someone who likes to plan. It might be a good jumpstart for a vision board for you and your spouse. So that is the NeuYear wall calendar, and the new is NeuYear.net. So that's my gift number 1. Gift number 2 is something called EverPlan. Now, we all know that we should have an in case of emergency plan and have all of our essential documents, passwords, all together, and make sure the people that need to know them know where they are. Maybe your attorney, maybe your advisor, maybe your CPA, maybe your son. We know we need to have all that stuff together. But what happens a lot of time is we have the passwords in one spot. We have our estate planning documents maybe in a safe, and nobody really remembers the combination of the safe, but you try to remember. So EverPlan is an online portal that you can organize everything that you need, from your estate planning documents to maybe copies of your passport, and you can keep them all in a safe place online. And the cool thing with EverPlan is you can assign delegates, meaning that, let's say you want your son, who's going to be the executor of the will, to be a delegate to see this information, but you really would prefer that they only see this information when you pass away. Well, they have systems to do that. So you can make them a delegate, but they can only really access it if they go through the procedure to confirm that you've passed away. Otherwise, they're not going to get into all your business. Another thing is, let's say you have a financial advisor, and this is what we're going to roll it out because we're just starting to use this, and you have copies of your tax returns and other documents in there that you want your advisor to have access to, but you don't want them to have access to other things. Well, you can select multiple delegates and determine what they get access to and what they don't. And the nice thing about EverPlan is that it has a very simple, I don't want to call it a tutorial, but guide that walks you through doing this in an easy, digestible way so you don't get overwhelmed. So EverPlan, you can have a 1-year subscription for $75. So you could gift that to somebody, maybe it's your parents or someone that you love, and say, this is a gift for you to help you be more organized. So if something happens, you and your family are going to be prepared. These are the type of gifts that are just like, oh, that's sort of cool. They're the type of gifts where you get a lot of appreciation if something happens. If somebody needs to access the power of attorney a year or so down the road, this is when these kind of gifts, it's like, oh, it saved me, because these are the kind of things that save you if you need them. So EverPlan costs $75 a year as a subscription. Now, members of the Rock Retirement Club don't even know this, but if you are an annual member of the Rock Retirement Club, which costs about $4.99, EverPlan is included as something you can use for free or as part of this annual membership. So everplan.com, you can use it for $75 a year, or the Rock Retirement Club, which is $4.99 and comes with a lot of other things. But I think this would be a great gift for someone that you love. Okay, gift number 3, this is a little bit more geeky, are smart plugs. So I have like 2 or 3 of them in my command center, and they're basically plugs that plug into the wall, and you can plug your lights into, or maybe a computer or other things. But what they do is they connect to your app on your phone. Like for me, I have a home app on my iPhone, so I can walk into my office, click a button on my iPhone, and turn on my command center lights for when I do video and things like that. Conversely, when I'm all the way downstairs and I have forgotten to turn those lights off, which happens a lot, I can hit a button on my phone and it turns them off. So you can buy these smart plugs, and you can program buttons on your phone to control certain ones. So if you leave the house and you wonder if you turn the lights off, you can check your app and turn them off right there. So smart plugs, you can find them on Amazon and things like that. I think that's a cool gift. Gift number 4 idea is away luggage. So we just had a rat infestation in my house. We thought just 1 or 2 rats, but we actually had a whole condominium project in our attics. So much so they had to take all the insulation out because I guess rats pee a lot. That's gross. And then they had to put new insulation and everything else. But as a result of that, we had to get rid of a lot of stuff in our attic, including my favorite piece of luggage because I travel a lot. So I got an away luggage and I like it a lot. And you can get monogrammed on it. You can get a monogram on it. So that's a great gift, maybe for a graduate from college to encourage them to travel. So I like away luggage. I really like my bag. Gift number 5 is if you're an Apple ecosystem type of person, the AirPod Pros, those are the little buds that go in your ear. And these are the brand new ones, are amazing. They're not a small iteration on the original AirPods. These are a whole new thing. They got noise cancellation. The little thing sticking out is smaller, so it doesn't look so much like an earring. So the AirPod Pros for your Apple geek friends. My next gift idea, and this is my favorite gift for pretty much any guy I know and any lady that's outdoorsy that likes to work in the garden or my wife likes to work on furniture. And I've said these before, but giver gloves. So it's give with a little, what is that, apostrophe or a dash above the E? I don't know what they call that. And then an R, giver gloves. They're super soft. They fit like a glove. They have cold, moderate, and warm weather, so like work gloves, and you can get them branded with initials. I have a few that are branded, and I know the gentleman that owns the company in Jackson Hole, Wyoming. He's the real deal, Bubba, and they actually brand your initials or whatever you want branded on there. So giver gloves are great for anybody that likes to be outdoors. My next recommendation, and this is my wife's favorite, by the way, my CPA and good friend Steve has been getting us for this for years, and it's like my wife likes this more than any gift I ever get her for Christmas. It is a beef tenderloin from Perini Steakhouse, or Perini Steaks, and they send them all over the country. Perini, Perini Steaks, and the beef tenderloin is like butter. It's amazing. So that's a great gift for someone who has everything because it's a unique Texas thing. It's world-renowned steaks. In this case, beef tenderloin. You love that. And then my last gift idea is a Cutco knife. Now, Cutco is that everybody's probably been pitched Cutco at some point in their life, but they're amazing knives. And I was on a podcast once, and the gentleman sent me a Cutco knife. It was like the knife you use for cutting things, not the steak knife you use for cutting things. That's silly. Anyway, and so now we actually send them sometimes as client gifts and get a carving knife or something along that lines, and then you can have it engraved with the person's name that you're giving it to, which is always a good thing. If you're giving anything with a name on it, make sure it's that person's. My wife loves her Cutco knives, and it's something most people won't buy for themselves. So those are my gift ideas. Well, hey there, and welcome to actually what's going to be a new segment, Coach's Corner. We don't even have segue music for it yet, so we're going to get that going. So what is Coach's Corner? So this is going to be a once a month segment where we are going to provide coaching tips around the themes that we're talking about for the month. And so these tips, well, I'll let our coach tell you what these tips are going to be about. But we have an amazing lineup of themes starting next month, going all the way through 2020. In fact, I'm so proud of myself because I literally have every theme for the entirety of next year mapped out so we can be ahead of the curve to create, well, hopefully amazing content. And these are all designed to help you rock retirement a little bit more on the non-financial stuff because that is, well, I would say, okay, it's actually more important, or at least equally as important as the money stuff that we nerd out on. And to do that, I'm going to bring in a certified retirement coach, head of education in the Rock Retirement Club, Kevin Lyles. I call him Beach Walker, BW. I'll try to limit it to that. And he's going to help with these tips every year. So I wanted you to get to know him. So, hey, BW, what's going on?
Hey, Roger. Good to be with you.
So what can we expect from Coach's Corner? Am I going to need a cup of tea?
You're going to need a notepad, some stickums. What we hope to do, or what I hope to do in these segments, is to bring for your Retirement Answer Man listeners what the research has shown as being effective ways to ease into and, in fact, thrive in retirement, which is what I like to get people to do. So we're going to talk about topics like work reorientation, replacing work functions, life meaning and purpose, family and relationship issues, how to fill your day in retirement. A lot of people have concerns about that. Health and leisure, all those kinds of topics as they fit in with your podcast themes.
So I guess the big question is, what the heck do you know about any of that? So tell me about your journey.
Well, husband, father, retirement planner, retirement coach. I've been married for 30 years to Sally. We have 2 grown children who are out of the house. I retired a couple years ago at age 55 after a 30-plus year corporate law practice, and started studying retirement planning because I wanted to understand all this stuff you were talking about on the podcast. So I got my CRPC, which stands for Chartered Retirement Planning Counselor designation from the College for Financial Planning, and was really enjoying that. And then realized this non-financial stuff that you talk about really is what people were concerned about in the Rock Retirement Club. I've been involved with the Rock Retirement Club since its beginning, was one of the charter members, and been sharing planning advice, but I went on to become a certified.
Oh, wait a second. There is no advice in the Rock Retirement Club.
Correct. Sharing my thoughts and ideas.
Yes.
Thank you very much. But I've been involved with that for a year, and I went on to become a certified retirement coach to help people with those financial issues. So that's what I've been doing.
Well, what I've appreciated about your perspective, and one reason why I'm excited about this segment, BW, is that my view of you has pivoted a lot in the time that we've known each other. Because for those that, he sort of downplays his corporate career, but he was like one of those power lawyers that the air rushed out of the room as he walked in. He's a great negotiator and he has a really sharp mind. And so when he started talking to me about his passion about the non-financial things, I always say softer things and he doesn't like that. So the non-financial things, it really surprised me because he is technically very detailed. And I think that's a great combination because sometimes, especially for the nerdier of us, when we hear non-financial things, we start to sort of turn off. So I think you bring a little bit more of an analytical perspective to what the research says.
Sure. I like to hook them with my Roth conversion ladders and then talk about the real important things.
There you go. There you go. Now, this is finishing what I'll call our first iteration of a month on tax planning, because I don't think we've done it justice yet. We'll have to do a whole nother month of tax planning. But from this non-financial end of it, do you have any tips for us today?
Yes. Let me start with the financial, which is get a handle on your income this year, get a handle on those capital gains and dividends. But from the non-financial side, it's really taxes are like any other expense. They may be a big one, but don't stress out about taxes. A lot of people, because it's so filing returns is such a complex factor, just don't stress out about taxes. If you have a good CPA that you use, trust them, but just don't stress out about your taxes.
I always think of that training video for pilots, and I've mentioned it before, and I need to find another analogy where they actually crashed a plane because they were worried about a dial that was annoying them because it wasn't working, and they fixated on one thing and they missed the big thing. I think taxes can definitely be that way, can't they? Because some of us
Sure.
Philosophically just don't want to pay taxes.
Well, what happens when you get that letter in the mail that says IRS? You panic before you open it, right?
Yeah, I think I mentioned the other day I got one that came in the mail, and I'm like, it's time for the audit. And it was like a refund check for like $4.
Exactly. So don't stress out. It's another expense we're going to have, and just deal with it like you do the rest of your financial matters.
So we just wanted to introduce BW here today. So you got to know him, and we're going to have a once a month segment. Now, I do have to make sure I do disclose one very annoying fact about BW. And that is he is a Buckeye. And as a Ann Arborite, born and raised, maize and blue, and also a Spartan, It is one of those things where as much as I love him, it's like that little thorn that just always sits there when I see him, especially when he sends me Buckeye hats. So I just want to get that out there.
Red does look good on you, Rod.
All right. BW, we will see you next month. And now we're off to practical planning. So here we are in the last segment of tax management in retirement. We could do a couple months on this. It's a very multi-dimensional puzzle we're dealing with here. And I feel like we've just touched the surface, but don't fret because we will come revisit this subject for a whole month again. It's an important subject. Now we remember, this is a quiz for you if you've been listening to the series. What is the number one rule when it comes to tax management in retirement? Do you remember? Don't let the tail wag the dog. The tail being taxes and management of taxes, the dog being you and your life. It's very easy to go try to bend yourself into a pretzel to save $1 or $2 of taxes and really not get yourself that much far ahead when you calculate your time, the complexity that you've added to the situation, etc. So don't let the tail wag the dog. So what I want to do today is frame this again in terms of everything we covered, and then talk about what you do from here. Because obviously we want to be able to give you the solution. So what are the taxes you need to be aware of when you are retiring? Well, we have taxation on Social Security. We want to be aware that our Social Security benefit could be taxed depending on the income we earn in retirement. We have to remember about IRMA surcharges. So IRMA surcharges are the surcharge on your Medicare payments, Part B and potentially Part D. If you earn over a certain amount of money, you can actually get a surcharge on your Medicare premiums. We got to be aware of that. And remember, it looks 2 years in the past. So in 2019, Medicare is looking at 2017 earned income to determine whether you're going to pay a surcharge or not. So it's always looking backwards. Third, we have to remember income taxes and the income tax brackets. The income tax brackets are something we want to become more familiar with in retirement because we have usually more ability to control the taxable income we receive. And so we want to be more familiar with the brackets so we can make sure that we're realizing income intentionally to try to manage what tax bracket we're in, what our Social Security taxes might be, and whether IRMA comes into play or not. And then lastly, at least this time that we covered, is our required minimum distributions. So at 70 and a half, you're going to have to start taking out a certain percentage of your pre-tax assets every year until you pass away. And once those RMDs hit, that's going to be forced taxable income that you have to realize every year if you don't do any planning. And that goes into the ones before because you want to try to figure out how do you manage your required minimum distributions before you get there, because once they start, they're never going to stop. And it could limit your options when you're managing for IRMA or taxation of Social Security, etc. You can see how complicated this can get. So if those are the things that are changing, or those are the things that we have to manage, what dangers lurk in managing taxes in retirement? One that we don't think about a lot is when we think of the tax brackets, we think of the tax brackets that we have right now. But in fact, in 2025, absent any congressional action, the tax brackets revert back to what they were before the recent tax cut that changed the brackets. In those tax brackets, the old tax brackets that could become the new tax brackets again, the range of income within each bracket is drastically different, and the tax rates are higher overall. So here we are, almost 2020. Yes, we're planning for tax management based on the current tax code, but because we're going to be doing multi-year planning, which I'll get to in a moment, what do we do, man? In 2025, we revert back. Well, one thing you can do is to try to model your tax planning using the current code and then using what as of now will be the current code in 2025 so you can see where those things will hit. It gets so complicated, doesn't it? But that is a danger that lurks because if we switch back, then you thought you were managing to one tax bracket, and all of a sudden you could be in a whole different situation. Now, another danger that lurks, and I tend not to spend too much time on this one, and that is legislative risk. We are coming up to a presidential election, and depending on who gets in, holds the majority in Congress and so forth, we could see dramatic tax differences in federal taxes, depending on who gets in. And as of now, the positions of both sides are drastically different. So that poses a danger, and it's something to be aware of. But again, you don't want to let it wag, but you don't want to let it wag too hard because you can't really handicap what that will be. And, we'll start to have more clarity here by the end of 2020, but that's a danger that lurks out there. Another danger that lurks is the IRMA 2-year look back. That's the subsidy on Medicare. And that's a danger that lurks because if you're sitting here and you're 63 years old and you are retiring and you have, say, big deferred comp that's paying out, or you have options that are going to do a cashless exercise and you have a huge income year in the year you retire and say when you're 63 years old, well, 2 years down the road when you're 65, that could really jack up your Medicare surcharge benefits via IRMA unintentionally. Another danger that lurks, and this is one, well, I'll save this one to last. Another danger that lurks is big withdrawals, meaning we take out that $100,000 to buy that RV or that lake house, and we take it all out of a tax-deferred account, not really thinking about it, and we zoom up the tax brackets unintentionally, which could, one, zoom us up the tax brackets, but two, cause us to have our Social Security taxed or cause IRMA to come into effect for a year, etc. We want to be smart in how we make withdrawals so we can make sure that we don't have some big spike in income in a period of time when we really don't want to have it because of what it's going to do in a different place. So we want to be smart about that. And the last danger that lurks, at least the one that I want to talk about today, is one we don't think about a lot. And that is what happens when our joint tax return, if you're married, becomes a single tax return. I've been married 29 years. I don't think about being in the single bracket. I've always been in the joint tax bracket. And maybe you have been the same. So when we're doing multi-year planning, which we'll get to that we need to be doing, in retirement, the majority of time we're thinking about, do we do Roth conversions or do we take money out of our IRA based on the joint tax returns now or within the next 3 to 4 or 5 years? But what happens when 10 years from now, one of you passes and all of a sudden you're in the single tax bracket? Let's use an example. So if we just look at the 12% tax bracket, and I'm looking at 2019 numbers, to the top of the 12% bracket, the income level that keeps you in the 12% bracket tops out at $78,950. And it starts at $19,401. So any income within those income ranges are in the 12% bracket if you're married filing jointly. But if you are single, the bottom isn't 19,401 of the 12% bracket, it's 9,701. And the top of the 12% bracket isn't 78,950, it's 39,475. You're going to go up the brackets a lot quicker if you're single. Not only that, is that you're not going to get the same standard deduction because there's only one of you. So you can do some great tax planning for you and your spouse as a couple, and then get to be in the 70s. One of you passes, the other one has to take RMDs, required minimum distributions. And now you didn't think you'd be running up the tax brackets that quickly, but now because it's a single taxpayer, not a joint taxpayer, all of a sudden the tax picture doesn't look near as good. You can see how complicated all of these dangers plus the types of charges that might come into play can be when you're planning. But that's a big danger that lurks that a lot of us don't think about too much, to be honest with you. Okay, so then the next question is, what tools do we have to battle these evil dangers of taxes? Well, tool number one is we have the ability to time when we realize income. And some of us have that ability in total because we don't have pensions, we control when we realize income. Some of us may have big pensions, and that weakens this weapon or tool that we have in our toolbox. But you have the ability to manage more than ever before when you realize income. That's a big tool. Tool number 2 is we can create a balanced balance sheet. And I think the quicker we try to do this, especially in our 50s, the more options we're going to have. What do I mean by balance the balance sheet? That means having a mix of after-tax assets, pre-tax assets, and Roth or tax-free assets. If you're in your 50s, probably up until, for the last 4 decades, all you've been doing is saving pre-tax first and always trying to do that and defer, which is beautiful the longer the time frame you have. But having a balanced balance sheet from a tax perspective can give you some tools in retirement. Tool number 3 is doing Roth conversions and filling up the buckets of tax brackets like we've talked about and trying to convert and manage when you pay tax on your pre-tax assets. And you can take money from your IRA or your 401k and pay tax and put it on your just after-tax balance sheet, or you can convert some of that to Roth and never have a tax bill again with those assets. So managing how you do Roth conversions. Another tool we have is strategic gifting, charitable gifting, whether that's using a qualified charitable distribution for an IRA or for required minimum distributions, or giving money in a year when you're going to be in a high income tax year or realized income year. Again, this assumes you have the charitable intent anyway, but charitable gifting is a tool that you have that a lot of us don't pay as much attention to as maybe we should. Strategic giving money to family members who are ultimately going to inherit all the money anyway. So in any given year, you can give up to $15,000 to anybody you want, even more. You could give $15,000 to anybody you want. So if your son is going to ultimately be the recipient of your estate, if you count the cost and realize, wow, I can start gifting each year and start getting this money away from me, that is a tool that you have. When you take Social Security, the timing of taking Social Security, you may want to take Social Security as early as you can, but realize, wow, if I take it, I'm going to start getting taxed on it. And when I figure out my benefit after the amount of tax I'm going to have to pay on it, it's better to defer and get a higher benefit and take money from pre-tax assets beforehand. There's some timing things you can do. So timing of Social Security can't be just done in a vacuum of when you need it or how long you think you're going to live. And the last one I'll throw out there as a tool you have is strategic leverage. Why would you use leverage? Well, we talked about this. I forget which episode it was, but let's say you're going to buy that big RV and it's $100,000 and you realize, wow, if I take $100,000 from my IRA, it's going to really zoom me up the tax bracket and I'm going to hit IRMA in 2 years and that's not going to be good. Well, rather than take the $100,000 in 1 year, you could use leverage to buy the RV, which I'm not necessarily a fan of, but in this instance, this is a tool you have, and then take money out in chunks for 3, 4, 5 years to pay off the loan and manage your tax bracket rather than just taking the whole $100,000 out at once, as an example. So those are some of the tools that you have. So we talked about what you need to be aware of, what some of the dangers are. The problem is there is no way of just simply to solve it. So I want you to create a dashboard, okay? So when you're managing taxes and retirement, I want you to create a dashboard, and here are some of the things I want to have on the dashboard. Number 1 is define what is most important to you. And this could be simplicity. This could be charitable giving. It could be, I want to pay the smallest amount of tax today, and I'm not worried about 10 years from now. It could be, I want to minimize taxes throughout the glide path of my retirement. Everybody's going to be different there. Some people are going to want more complication than the others. So you want to know what we're trying to accomplish here. The second thing we want to have on the dashboard is we want to have multi-year estimates on the inflows that we are going to have. So this could be over 4 years, over 5 years. You can go out 30 years if you want. We want to build a spreadsheet so we know multi-year an estimate of the inflows or the income that we're going to be receiving, because it's going to be important to know that. If you know you got a pension for $50,000 a year, we want to know that, okay, this is the heartbeat of that one. And then we also want to have a multi-year estimate of goal funding. And we want to break these goals down by needs, wants, and wishes year by year, because this is money that's going to have to be funded by your income and your assets. And so once we have that, and target 5 years, target 10 years, I tend to target 5 to 10. Once we have that, so we have what's important to you. We have a multi-year estimate on inflows, the income you're going to get. We have a multi-year estimate on the funding broken down by a needs, a wants, and a wishes category year by year. And then we want to have a multi-year forecast of the deficit needed from your assets. So what do I mean by that? We've talked about this in different forms. If you need $100,000 to live on, and you have a $50,000 pension and no other income sources, well, we know $50,000 of that need you have is coming from your pension. So there's $50,000 that are going to have to come from your financial assets, your money. And now that we have isolated how much do we need from your money, not your income, then that will give us a better view of, okay, if I need $50,000 from my money, where am I going to get it? Do I get it from my pre-tax assets? Do I get it from my Roth assets? Or do I get it from my after-tax assets? And that's where you're going to be able to start to see in multi-year scenarios, oh, I got to figure out where I'm going to get this much money in 2 years from now. And I have these different tax categories, and then you can start to do some tax forecasting. The next thing you want to have on your dashboard, may not be on the same spreadsheet, may be on a table to the side, is you want to isolate, okay, what pre-tax assets do I have in 401ks, IRAs, etc. And you want to forecast, if you don't touch those assets at all, what are the required minimum distributions going to be when you are 70 and a half and then going forward? Normally what I do is I just take, okay, if we've got $1 million in pre-tax assets and I'm 6 years away from being 70 and a half, I just say, okay, 5% return on that $1 million for 6 years. And then I take the required minimum distribution table, because what happens is the IRS has a life expectancy table and it says this year you must take out X amount. This next year it goes up by a little bit. I think first year right now is about 3.6%, and then it goes up the percentage that you have to take out. So you want to build a dashboard so you can estimate, if I don't touch any of my pre-tax assets, this is the income from my pre-tax assets that I'm going to be forced to take when I'm 70 and a half if I don't touch it at all. That's going to be very important, because you may decide to take some pre-tax assets early, say when you're 66, because it's going to help lower the required minimum distribution so you can make sure that you're not running up the tax bracket once you hit 70 and a half. And then you want to have a balance sheet based on what assets you have by tax category. And then ultimately what you're going to have to do is model different scenarios of funding the consumption that you want, those needs, wants, and wishes year by year. So if we're sitting here today and we've built this dashboard, then you're going to see, let's say 5 years out, each year, the income sources, each year, the money you need to live on your needs, wants, and wishes, each year, the amount that is not going to be covered by income sources, the life that needs to be funded by your money. And then you're going to have how much money you have in each category. And you're going to have to model scenarios to manage your tax brackets, thinking about when IRMA comes in, determining when you take Social Security. And it's going to end up being trial by error. And you're not going to get it right. And that's okay. Don't let the tail wag the dog. Try to be prudent about it. But unless you want to geek out and this is just something you love, you just want to make sure you pick up the nickels and dimes and maybe $1 or $2, and you don't do anything that was like, oh man, if I would have just looked at that. But at this kind of dashboard with these items, I think will help you a long way. All right, next week, we are going to dive into travel in retirement. Maybe we'll have some great travel ideas for 2020. But before we do any of that, let's go get happy with Nicole. Welcome to the Thankful Lab. Thankful November.
Tomorrow's Thanksgiving.
That's right. I've been fasting for 8 days. I have not. But
what are you going to eat that you're fasting for?
I don't like to overeat. But one thing I am thankful about for Thanksgiving is, to be honest with you, it's sort of a painful thing. I am thankful for the Lions playing on every Thanksgiving. I grew up in Detroit. I actually went to some Thanksgiving Day football games, and the Lions have been horrible my entire life, but I
don't even know who the Lions are.
That's sad. Well, there's not a lot of reason to. It's the Detroit Lions of the National Football League. Maybe it's because I did it as a kid and it was a family thing and we watched them lose and yelled about the quarterbacks and the owners and everything else. But I'm thankful for the Lions. I feel like a Cubs fan waiting for them in my lifetime to do something that I can be like, and I can be that guy. I've been a fan forever. That's what I'm thankful for when I think of Thanksgiving, outside the food and the people, obviously. But what about you, Nicole?
Well,
all right.
Thanks for putting me on the spot. My wheels are still turning there.
You're still going football? What is that?
I watch football, but I grew up in Texas, so the Lions have not crossed my radar.
Understood.
Sorry about that.
Understood.
But my grandfather was an Astros fan for his entire life, and he finally did get to see them win the World Series before he passed away. So maybe the Lions will become good in your lifetime. Could happen. So I'm just, this actually, has been kind of a hard year for my extended family. We've had several losses, including both of my grandfathers. So I'm just feeling very thankful for my family this year and the time that we do get to spend together, and, be really thankful for those grandparents you still have around and give them a hug.
Amen, sister.
On your marks, get set.
Okay, Nicole has created a cheat sheet for me. In the next 7 days, let's set a goal to take a baby step to create a better life. That totally works, that flashcard. Thank you, Nicole. So welcome to the Smart Sprint. In the next 7 days, start thinking about your withdrawal strategy from a tax angle. We've covered a lot this month in tax management and retirement, and we can see there are substantial dollars that are at play here potentially. And it's not about the money, but that savings that you can have just for being a little bit thoughtful in your withdrawal strategies can create dollars that you can do something special for you and the people you love. That's the way to think of it. That's why we should be motivated to do such a dry thing as think about a withdrawal strategy. So in the next 7 days, as you're sitting on the couch after you've seen the Lions,
give or take. I was going to say, maybe we should give them a little extra time.
Well, all I'm asking is after you see the Lions lose and your belly is full and you're sitting there and you're just start to think of, be more tax aware so we can make sure we can be good stewards of what we've been given. All right, my friends, we're almost into Christmas season. And next month, we are talking about travel in retirement. This is going to be a fun one.
That does sound fun.
I'm putting away my IRS publications and I'm pulling out my cruise brochures. Hope you have
like a lot better reading.
Yeah, better pictures. Have a great Thanksgiving.
Happy Thanksgiving.
We appreciate you joining us today for this episode of Retirement Answer Man. Be sure to visit rogerwhitney.com/answers to access the Retirement Answer Library with over 30 checklists to help you make the most of the only life you have. Remember, you have more power than you realize to create an amazing life starting today with Retirement Answer Man. The opinions voiced in this material are for general information only and are not intended to provide specific advice or recommendations for any individual. All performance referenced is historical and no guarantee of future results. All indices are unmanaged and may not be invested into directly. Have a wonderful day.